Hey everybody, welcome to the Thursday, the Thursday live stream that's happening on a Friday. And, of course, I forgot today is World Cup Day, so I would imagine most of you are either watching the World Cup and not here, or watching it in both places at once. So, good luck to England today, or this evening. I hope that they pull it out and do well this year in the World Cup. So for anybody else, you can catch this. You'll probably be watching this later. So I would imagine, hopefully, when you've watched England get a victory, you'll come and do a catch up on the live stream. So welcome. Nice to see everybody here. We just had a big holiday here in the US of A called Thanksgiving, where we give thanks, something to do with the Native Americans. My American history is absolutely shit, so I don't know anything about Thanksgiving or why it exists. But I did think it was something to do with the Native Americans, but pardon my ignorance on that. But yeah, so that's the reason why stream happened today and not on a Thursday. So back to Thursday next week. Please give me a thumbs up if you can. Talking about some interesting things today, a little bit of peer-to-peer. We're going to take a look at the Funding Secure update that was sent out about the administration. Going to look at we're going to look at investing. I've had a recently very interesting email from a complete novice investor that said, "Hey Lawrence, I've got 10 grand. I just inherited 10,000, and I have no idea how to invest it. What would you do if you were investing 10 grand today?" Which got me to thinking, well, if I did come into 10,000, even whether it's pound or dollars or Australian dollars or yen, wherever you're watching, I think you could pretty much use the same strategy. So I'm going to go through and show you exactly what I would do with 10,000 pounds to invest in today's market. That would be today. Things could change tomorrow, but this would be what I would do with it today. So we're going to talk about that and usual other shenanigans. Might take a quick look at the Trading 212 account, see how that is doing. So welcome to everybody in the screen. We got Paul in Kenilworth, Mike Powell is here, Peter Vincent, Leatherhead Peter, nice to see you. Aki Chapping, Accrington, of course, the Bitcoin connoisseur. Mark Mason is here from Greece, welcome. Hopefully Mark can fill us in maybe a little bit on that Funding Secure, maybe his opinion on the update. Mike Powell says it's the Pilgrim Fathers surviving the winter. Maybe that's what Thanksgiving is. Yeah, so very interesting. Hope to keep the stream relatively short this evening. Maybe you want to go watch the rest of the footy match. I could tell you, I was never a really big football fan. Probably because I grew up in Grimsby town, and Grimsby just had a really crap football club. I just never took to it. I remember going to the games, sitting there in the stands, them having a collection hat to pay the players because it was such a poor football team, so I never really got into football. But I do like the World Cup, and it's always nice to watch England every 4 years either do really well or cock it up somehow. I think weren't they in the final 4 years ago? Was it? I think I watched that one against Italy. I probably got that completely wrong, but yeah. Good luck to England. Good luck to Harry Kane. They're battling the US of A today, so I'm always going to be on the side of the UK, of England. Sorry, not the UK. Even though I know Wales did take a bit of a loss. But anyway, enough about football. We're here to talk about investing and peer-to-peer lending and other good stuff. So let us get right into it here. Oh, quick announcement that I did hear through the grapevine that Kuflink is going to now allow two things: a flexible ISA, which means if you have an ISA with Kuflink and you want to move money in and out of it within the tax year to not affect your ISA standing, that being a flexible ISA, now Kuflink does allow you to do that. And the second thing that they're offering now on the self-select inside the ISA is the ability to select monthly interest payments rather than, I think it was annual. So that's pretty cool. If you're looking to get income out of your Kuflink ISA now, you'll be able to do that. I personally do not have a Kuflink ISA, so I can't really verify that really is what's going on, but I believe it to be true. So hopefully we'll see, if we haven't seen an announcement already from them, one coming soon. So yeah, some good progress forward with the Kuflinks. Let's take a look at a bit of news here. Funding Secure owner resigns from CrowdLords. A former director and stakeholder in defunct peer-to-peer lending platform Funding Secure, which we know is in administration and has been for a while, has stepped down as a director of CrowdLords after 3.5 years. Businessman Raj Kumar was appointed as director of CrowdLords on the 2nd of April 2019 and resigned on the 1st of November 2022. Kumar joined Funding Secure in October of 2018 and acquired a 75% stake in the now defunct business. Funding Secure founder said at the time that the money would be used to support the platform's growth plans, but it collapsed into administration in 2019. Now, can you believe that this is now we're coming into year number 4 of the... Did I do that right? Yeah, year number 4 of Funding Secure's administration. And we're going to take a look at the update report on Funding Secure. It seems to me just that, what's funny is when you see somebody that was heavily involved, and I don't really have any opinion on Raj Kumar or Nigel Hackett or any of the really people at Funding Secure. I don't know them, never spoken to any of them. But what's funny to me is that you see these people that were once running these companies now in other highly regarded, director positions in other companies, with this kind of tarnished name of the company that they used to be an owner of that collapsed. So again, I don't know Raj's personal involvement of whether he had anything to do with misdecision. I think he sold the company at some point. I'm a little bit dusty as to the history of Funding Secure, but it always seems to me that the people that are involved in these companies that went bust always seem to land on their feet in good spots, and that's funny to me. It's something, I guess that's the way that the business world is, right? If you're a wealthy individual, you always seem to find your way out of a bad situation into a potentially better one. One would hope that if any of these directors were involved in bad decision making that really caused a lot of financial harm to people, that you wouldn't see them, opening a new company and without taking care of their old obligations to investors in the failed company. That just doesn't seem to be the case in these failed companies. We're not seeing the directors coming forward and saying, maybe we'll take a certain percentage of our wealth and give that to the investors who've lost their shirts in these Funding Secure Lendies and Wellesley's and the house crowd. We just don't see that, and that's really a shame. I know if I was running a company and I was able to do it financially, if I'd made some mistakes that had led to a company going out of business, that I would want to take care of investors as best as I could. But I guess not everybody is like that, and we continue to see stories like this where Mr. Kumar was a director of another company. I don't know about CrowdLords. I don't know how they've done, but apparently he's resigned. We don't know why he's resigned. Again, I don't know if CrowdLords is a profitable company or not, but he is gone now. So Raj Kumar, from one Funding Secure owner at one point, director, is now no longer director of CrowdLords. Who will be the peer-to-peer platform of the year? I'm going to do my own little peer-to-peer platform of the year award towards probably maybe the second or third week in December. And I'm going to announce who I think the peer-to-peer platform of the year is, but we see here we got Crowd Property Assets Capital, Kuflink, Folk to Folk, Shojin is on the list. So yeah, stay tuned and we'll see. Who do you think that the peer-to-peer platform of the year should be? What would be your number one choice if you had to pick a platform? Would it be one of the companies on this list? Crowd Property Assets Capital, Kuflink, Folk to Folk, or Shojin, or would it be someone else? Would it be a different company? To be revealed. Going to look at the Loanpad update. Here we are providing you with a brief update on performance of the portfolio. See, this was sent out on November 25th, so is that today? That was today. There are currently 175 loans within the portfolio with an average loan-to-value of just 40%. The average loan amounts account for approximately 0.57% of your funds, providing investors with a high level of ongoing diversity too. So that means your money is being split between these 175 loans that you've only got 0.57% of your money in any one individual loan. That's probably the ultimate type of diversification there. The total value of all live loans currently on the platform is just under £150 million, with 51% of that funded by Loanpad investors and 49% funded by our lending partners. You can see live data when you log in to your account. Interest rates are going up with Kuflink. We have new rates on December the 1st, 3.6% classic, 4.8% premium, and it's going to go up on January, up another 0.1% in both accounts, all the way to February 1st, that we're going to see 3.8% in the classic access account, and then 5% on the premium, which has a notice amount that you need to give notice for, which I think is a very reasonable interest rate now. It's good to see that Kuflink is increasing their interest rates, and I'd say 5% is definitely pretty attractive. Again, it's always those people are going to say, is it worth the risk peer-to-peer lending 5% versus I can get a 1-year bond, probably 4.3, 4.4. You have to make that own determination for yourself. I think personally it is. I think Loanpad has been nothing but good. They've done everything that they've said. Probably better than any peer-to-peer lending company out there, I think. They've weathered the pandemic storm really well. They've paid daily interest as promised. Hopefully when they have an update on their back-end coding, they're going to be able to do the 1p minimum instead of the £10 minimum, so create a little bit of less cash drag. But I think Loanpad, in my opinion, has done everything just exactly as promised. Remember, on January 5th, all promotions will end because of the new FCA regulations. So if you want to get yourself a Loanpad account, you want to get yourself some cash back, go to the Financial Thing website. Let me show you where to find it, and you can score yourself a nice bit of cash back. This is not a advertised promotion, but I mean, it's just one that, again, I like. Loanpad. Come here, you can see here cashback page, and then Loanpad is right down here, right here. You can just click sign up. So yeah, I'd say a very, very positive move with the interest rates increasing. We'll have to see what happens with your Bank of England rates. Do I think they're going to continue to rise? I do. So we may even see these rates go up first quarter of 2023 too. So most regulators do not see digital lending as high risk. The third global fintech regulator survey from the Cambridge Center for Alternative Finance and the World Bank found that just 8% of respondents deemed digital lending to be very high risk, and 19% it was high risk, compared to 31% who thought it was low or very low risk to consumers. 24% saw digital lending as medium consumer risk, while 18% were unsure. 33% said it was high or very high risk, compared to 20% who said it was low or very low risk. And then 20% of financial authorities said that the risk of loss for peer-to-peer lenders was high or very high, compared to 18% who said it was low or very low. So what can we learn from this article? Well, what I learned from it is that everybody doesn't really, these professionals, these regulation companies don't really understand. They've just got very differing opinions on the risk levels of digital lending, peer-to-peer lending, and whatnot. Probably a lot of it is just lack of understanding, probably never investing in the sector. So if you never invested in something, you're looking at it from the outside, you're going to have a very different perception on if you've actually been an investor and you know how the inner workings of something like peer-to-peer lending or digital lending work. So yeah, very mixed opinions, but in general, they do not see digital lending as high risk. So medium, yes. High, only a small percent. S&P warns on corporate and consumer debt burden. This is more of kind of a global finance situation, but it does affect peer-to-peer lending in some ways. I'll explain why. The S&P Global Ratings, by the way, that's the company, it's the S&P 500. I don't know if you can call it sponsorship, but anyway, S&P Global Ratings have warned that the world is facing a historic debt burden, which could lead to a rise in defaults on corporate and consumer loans. In a news report, the ratings agency said that the global debt to GDP, gross domestic product, is at a historic high of 349%. So what that means is 349 pounds of debt, right, versus 100 pounds that is coming in as gross domestic product. So that's a massive ratio on the bad side. That means there's tons of debt, not as much income coming in for just GDP in general. This is global too. I mean, this is every country that is reported in here, and that this is 25% higher than it was in the pre-2008 financial crisis era. This suggests that productivity from debt has declined, the S&P said, and as a result, it will be hard to avoid write-downs and defaults, the company warned. Household debt has been affected, with the S&P predicting that households may have to spend a bigger share of their responsibility income on servicing debt. However, analysts expect global household debt leverage to remain relatively stable in the next 2 years despite interest rates rising. It's kind of really backs up in this storm that I see brewing on the financial horizon, where things just aren't right. But it's taking a lot slower for the storm to arrive and to hit us than I think it should, right? We've got all this debt. People are not making as much money. Companies are not making as big a profits. We've got a lot of debt. We've got high interest rates, high inflation, this perfect storm of economic crap. And yet everything still seems to be going along as normal. But, I think personally in a few months' time, we're going to see this storm ride in. And unfortunately, it's not going to be good, but we'll see what happens. Maybe things can turn around. Here is the Funding Secure Administrator's Progress Report. I did read through this. This kind of, to me, was really more of the same. Just, again, we've been dealing with the Funding Secure Administration since 2019, and it just seems like nothing really proceeds to progress forward. Fees just keep on going forward, but recovery's not really great. I saw, there's a lot of fluff in here. Some of it I really honestly didn't understand, but one thing that was interesting here, during the period of total gross realizations amount to 3.822 million. So this is the period of April 23rd to October 2022. So this would be a quarterly report. So we've had a 3.8 million pound realization, which means one loan was, I presume, recovered. It mentions in here about unsecured creditors and how they are likely to, it just says that they're really not just going to show what's happened, but it seems like unsecured creditors are going to get the shaft. I'm not sure that investors aren't going to get the shaft either, because one problem is obviously the fees. Now, they have recovered 43.799 million to date, but there is 25.7 million and 51 defaulted loans still out there in trouble. So I believe the date of this through the courts was pushed forward to October 2023. But when you have 51 defaulted loans out there, there's just no way this is going to get wrapped up by October of 2023. Let's look at the numbers on what's going on here. It doesn't look good anyways. You know, I hate to be the bearer of bad news, but we can look at the statement report. So this is insolvency property redemptions, 3.822 million. Completed property redemption, 0. We got a whole lot of zeros on here. One thing that was very, very interesting here, if you look down, investors deposit right down here, somebody deposited £100 into Funding Secure. I don't really know what that's about. But, and then we get down into the fee schedule. This is where things just kind of gross. 15,000 in salaries, 21,000 consultancy fees. What else? No sundry expenses. That's good. But then we go down here. Legal fees and disbursements, 98,600, and then boom. Receivership, insolvency costs and expenses, 769,140 pounds, and receivership, insolvency legal costs, 214,000. Direct charge holder, not sure what that means, 350 grand. But you just add these two, insolvency costs and expenses and legal costs, you're approaching £1 million, in costs and legals. And it's just, the more this just drags on, the higher these fees are going to get. And this is why I just think it's going to be unfortunate, and we're just not going to see, as an investor, much coming back in the way of returns at this point. I've pretty much written it off as it's probably a total loss at this point, but who knows, right? I just can't see them getting anything accomplished in a quick timeline, because all of these defaults are so messy, so hard to sort out. You got borrowers who are, doing weird things in the courts, delaying things, not responding. I'm sure some of them are going bankrupt, some of these borrowers. So very, very, very sad. Is what it is. This is why I think, on a positive note, I think we're in a better era of peer-to-peer lending now than we were in 2019. 2018, 17 was kind of like the boom of peer-to-peer lending. I put it akin to sort of like the boom of crypto, when crypto was just going mad, peer-to-peer was going a bit mad. And then we had this wash through all these bad companies that have hit the dirt and gone RIP. But now I think 2022, 2023, what we're seeing, like Louis from Loanpad said, is the progress of the really good companies that have been in business for a while now, who are showing that they're doing good things and that they can operate in a in a smart manner, and we're going to get paid on investments like we're supposed to. So yes, there are bad news for those of us old schoolers that have been around in P2P for a long time and fortunately got our fingers burnt. But, I think there is some light at the end of the tunnel with the companies now that are doing good things like Loanpad. I think, day to day, of course, things can change. But if you look at my top 5 list, it hasn't really changed at all. I think those companies are doing what they said they should do. They're giving us what's on the tin, and they're proving that they were able to survive the pandemic through those very, very difficult times. I mean, the pandemic was a horrible time for people involved in the peer-to-peer lending world, for those businesses, because everything kind of came to a screeching halt. So they were able to survive and continue to operate, and in some cases continue to pay interest and returns. And the ones that weren't have either put the kibosh on their business or have gone under. I think I have to check the score. Hang on, the footy score. Halftime 0-0. Oh, okay. Maybe that's why I always found football to be a bit boring because of the lack of scoring, but maybe I've turned into a Yank. Anyway, let's move on. I just wanted to mention this because I had a couple of questions about Fidelity. I don't believe this is in the UK, but if you're in the US watching, Fidelity is going to be opening crypto soon, where you can buy cryptocurrency on Fidelity. One thing I want to tell you that is very, very, very important if you're in the US. You can go on the wait list, by the way, if you want to. I do not recommend this at all now. The Fidelity is obviously a very secure business. It's been doing good things for a long time in the stock market, funds world, index trackers, things like that. But for crypto, here's the two big problems with crypto through Fidelity. You cannot transfer your cryptocurrency out of Fidelity or into Fidelity. So it says here, in this early version of Fidelity Crypto, you won't be able to send or receive cryptocurrency. We're exploring crypto transfers in the future. And then you cannot also transfer cryptocurrency into Fidelity. So the problem with that is it means you don't really own the cryptocurrency. It's like some of those other companies out there. Remember, not your keys, not your crypto. If you're not able to withdraw your crypto, your Bitcoin out of these company accounts, you don't really own it. So I recommend stay away from Fidelity for now. If they do open, it's like Robinhood is a company in the US that for a long time didn't allow you to withdraw your cryptocurrency from your Robinhood account, but now you can. So I fully expect Fidelity will wake up and make that as an option, because that's, after people have gotten so burned with cryptocurrency with these platforms going down, they're going to want to know that they can get it out if they need to. So I'm 100% sure Fidelity will add that feature in the future. They'll have to do it because they won't get any good adoption if they don't. So something to note, if you are thinking about using Fidelity. And I would imagine in the UK this will happen too. You will be able to buy cryptocurrency at some point. But I still recommend just buying it on Coinbase or another, whichever platform you prefer, and then moving it onto a hardware wallet. So it is out of these companies' hands. Okay, let's talk about this email I got. Said, Lawrence, I'm a complete novice investor. I've got 10 grand through an inheritance, and how should I invest it? Now, there are obviously a bunch of different answers as to the way you can invest 10 grand. One thing that I did email this person back, I said, this is what I would do. This is not financial advice. I also recommend don't do what I do. Do your own research. If you're not competent enough, you don't understand it, just put it into an index tracker. You'll be fine. And I'm also presuming that this person had some savings in cash, and because they said, how would I invest 10,000? So if you didn't have any savings in cash, I would take a portion of this 10 grand and put it into savings. But I'm presuming this person does have some other funds liquid to them. So yeah, let's take a look. And what would I do with 10 grand today? So I made a little presentation. Again, P.S. Please don't follow me. Again, this is really not financial advice. This is what I personally would do with it. Okay, so here we have the risk triangle. I think this is a really important thing to understand if you are investing, and the smart way to do it is to diversify. We have the summit, the middle, and the base. The base will be low risk, and the middle risk, summit, high risk. This is a very old triangle. I don't think that for most people that some of these things are going to be applicable. So I'm just going to cross out options. Let me turn it into a marker pen. Yeah, I'm going to cross out options because options are not to be messed with for most people. Again, with futures, collectibles, yes, you could look into collectibles. I personally don't really dabble in collectibles, so I'm crossing that one out too. What I did say to this person was, in this very, very high risk top, I would buy some BTC. I'm I'm going to try to write that in there. BTC, some Bitcoin. And I'll explain the breakdown, my methodology, so why I told this person this is what I would do. In the middle, we've got real estate. Not really doing anything with 10 grand when it comes to real estate. It's obviously too high of an entry point. And then we have high income bonds. I crossed that one out. I don't think that's particularly applicable at the moment. But I do think that mutual funds, even though it's going to be in a different form, yes. And then large and small cap stocks. And then on the base, this person was in his 20s, so I kind of even just cut this whole base out. So I don't think in your 20s you really need to be worried too much about doing something really safe, because you have a lot of time to recover from any of the mishaps maybe if the stock market is going to throw at you. And obviously if you're older, if you're in your 60s, 70s, 50s, you might going to be adding some of this in here. But for now, somebody in their 20s, no, we're not. Oh gosh, that doesn't look good. We're not going to put anything in there. So moving on, this is what I would do. If I had £10,000 today, I put it into actually three different risk categories. We got high risk, we got medium high risk, and then medium risk. So I would take, can you see that? Okay, I think that maybe the bit of the title's cut off, but if I were out of 10 grand, I would take £1,000 and I would put it into Bitcoin. Now, Bitcoin has taken a real beating, shellacking, whatever way you want to put it. Recently, if we look at coin market cap chart of where Bitcoin is, and again, this is for a young guy. He's in his 20s, but we're seeing Bitcoin is $16,526 US dollars. I think it's worth 10% of your 10 grand buying it at this point, because we've seen such a massive downfall from 59K high. It's not to say that this is going to go back to 59. It might go up to 159. It may get down to 3 grand. We don't really know. It's really had a hard time, but I'm still buying cryptocurrency, specifically Bitcoin at the moment. Dollar cost, pound cost averaging in every month at these low prices. So that was why I would take 10% of that 10,000, put it into Bitcoin. If you didn't want to do that, you could move that to something like a tracker fund or into stocks. But again, it depends on what your risk tolerance is. And again, this is how I would do it. Let's see. Next, we've got medium to high risk. This is where I would invest in some, probably like picking out 4 or 5 different individual stocks to try to hit some kind of better return than an index tracker. And again, this is me. I have more experience, I think, investing in stocks than your average person. I explained this on the email. I said, look, if you don't have any experience in stocks, buying stocks, I would not recommend this at all. I would take this money and do something else with it. But you did ask me what I would do. So I'd pick some of the stocks that are on the Trading 212 account. Let me go ahead and log in here and show you what we're invested in at the moment. So I really wouldn't veer off too much of the strategy of buying some of these shares that are in here, splitting it up. So I said VET, Vermilion. So we've got some oil, some commodity stuff in there. We're going to build a very diverse portfolio. So I'd put £300 in that. I put £300 in Deutsche Bank. You can see here I got the Deutsche Bank here at 1.24% in the green. Vermilion, we're in a little bit of a red area at the moment because I've been dumping more money, redeploying this back in to the Trading 212 portfolio. Right now we've only got £3,900 on the sidelines. So I'd take Vermilion. I'd take Deutsche Bank, £300. I'd put £300 into GLD. This is the gold. Let me show you what that is. So you can understand. This is the Spider Gold Trust. So why would I do that? Because I do not own any gold in this portfolio. However, if I was investing again, £10,000 today, what this is going to do is give you a bit of a hedge against when this stock market correction comes. I think that gold will be one of those safe havens probably when the market's correct that people run into. So if you think really if that's the case, then maybe you would go more on the gold, less on the oils, or less on the banking. But I would diversify it out, put 300 pounds into the Spider Gold Trust. It's going to follow pretty much the price of gold. Then ARK, I would add a bit of technology. The ARK ETF, which basically holds things like Tesla. It's really done pretty badly. Let's see what the chart says. If we look at the 1 year, we're all the way down from over $100 US now, sitting at 36. So we're seeing a pretty big low here, and that ARK Trust owns quite a lot of technology stock. So there you go. You got some technology exposure without having to buy a single technology stock, because that can be problematic. Some people say, well, go into Tesla or maybe just buy Apple. You could do that, but I think this gives you better diversification. Hopefully, Kathy Wood doesn't screw that up. And then next, Calera, CLR. This is kind of the high risk, knock it out the park stock. You see I've got 3,400 pounds of the Trading 212 portfolio money in. It's very, very volatile. It's gone up a ton, but I think this stock could definitely hit about $4. That's sort of where my price target is. So I would go ahead and add that one. And that is a communication services to the financial institutions, e-commerce, software companies, blah, blah, blah. Very small cap, very volatile, very risky. But again, I think it gives you some exposure to do, if this does a 4X, you're going to make some decent money out of that. What's next? Zim. We got Zim, the Zim shipping company. The reason why I like Zim, one of the reasons, they just pay a massive dividend. And if you want to get yourself a piece of that dividend, by the way, it's upcoming on November the 28th. You got to own it by the 28th. Hang on. Why are you not coming up? Here we go. See what this dividend is. They're going to pay 295 cents. So if you own 100 Zim shares, you're going to get, on the 7th of December, a $295 payment, which is huge. Basically, when Zim gets money, they pay a ton of it out in dividend payments. What that means is the stock price is not probably going to run really high, because when they pay the dividends, you're going to see the price start to fall. But it gives you exposure to the shipping sector and pays a absolutely massive dividend. Yes, it is quite a risky stock again. Not a huge company, but it's giving you that exposure with the chance of some real upside and again some really nice dividends. Again, not financial advice. Please don't follow me. This is just what I would do. And then from there, so we've got a 6-stock single stock portfolio. Here we go into our medium risk, which I consider the U.S. equity index tracker. I would put half of this money into the index tracker. If, again, you have no experience picking out single stocks, I'd probably just completely ditch these and maybe put all of that money into the index tracker, so you don't have to worry about how these are going to do. But this is just what I would do. So I put $5,000 into the Vanguard U.S. index equity tracker. Let's take a look at how that is doing. Vanguard, I haven't checked it in a while. Vanguard US equity index. I think this is a really good option too for this, for certainly a 25-year-old person who just wants to put money away and forget about it and not have to worry about it. The risk has gone up here. This used to be I think a 5 out of 7. So you can see they have categorized the risk a little bit higher. Personally, I think of this as a very long-term investment, 30 years plus. It's just not a 6 risk for me. It's probably a 4 or a 5. Because you're going to run out those ups and downs in the stock market. But let's look at the price and performance. Here we're at £728.33. But if you look back, let's go back, see, to 2017, say for instance. Give it to me, come on. Do it. we go all the way back, you're just going to see these prices generally have been pretty flat for the last 2 years because we've seen a very flat S&P 500. But during that boom period, see in 2020 it was in the 500 range, even in the 400 range. And then we go way back to 2017. Come on. It's down into the 400s and dipping into the 300s. So 407 back in 25th of October 2017. So we had about a 300-pound appreciation on the accumulation fund. You could do income or accumulation. Personally would do accumulation because if you look at the price on the income, 605 pounds and 21p versus 728 on the accumulation. And you do get dividends, but the dividends are just, there's only 1.23%. So I think you're better off compounding in the accumulation stock. So I'd take $5,000 and put it in the Vanguard US Equity Index Tracker. Then I would start adding some peer-to-peer lending in here. I would consider these to be medium risk. I just kind of group peer-to-peer lending together, even though Loanpad is certainly not as risky as some of the other peer-to-peer lending companies, but I put peer-to-peer in general as a medium risk. You know, maybe possibly verging into medium high depending on what you invest in, but what I picked out I consider medium risk. So I put 1,000 in the Loanpad into the not the Access, into the Premier. So I get that little bit of a higher interest bump. 400 pounds into Kuflink. 400 into Crowd Property. 400 into Unbolted. So there you have it. I think that's a really good way to diversify if you're hitting some of this high risk potential. You know, Bitcoin takes off. That would be a nice little bump to your 10 grand. And if it didn't, if it doesn't do much or it drops, again, we're talking very long term here for a 25-year-old. I just don't think you're going to be too risky putting 10% into Bitcoin. These stocks, again, really diversified, different sectors. You got oil, you got banking, gold, tech, communication, and shipping. So you're kind of covering most of your bases. Sure, there's others you could put it into, but that's personally what I would do. Most of the money into the index tracker, like I've always said, I think this is just a set it and forget it investment where you don't have to worry about picking and choosing things, buying and selling. You just use that one investment for the rest of your life. And then hire into Loanpad, just so I think it's a safer product, and then split the rest of the cash into those companies. Yes, there's some other ones you could add in there, but again, today on November 25th, 2022, that is what I would do if I was going to invest 10 grand. Just again, a quick look at the trading 212. It's kind of hovering around 19,442. I expect we'll see either some bigger upside or bigger downside. Now we've got 3,900 of the 19,000 invested. Pretty much just the same thing. Haven't sold anything. This Ginkgo Bioworks Holdings has been the big stinker. Thank God didn't put too much in because I knew the risk was really high, but we're down about 27% in a month. And then Calera up about 26%. So this was all the way up to 148 today. And then it's taken a bit of a fallback. I honestly imagine these troughs and valleys were going to be a lot bigger than that. So kind of surprised it's still holding around these levels. And then little bits of reds in these stocks because it's just money's just been invested in it recently in higher amounts. So I expect we've seen a bit of a pullback in oil and energy to be expected. And Disney's had a rough time, but I expect these stocks, as long as the market doesn't decide to take a big poo early, then I expect those things are going to be okay. We got Synovus Energy and Zim Integrated Shipping down here, plus 3.75%. Now remember, in this portfolio, these returns are looking pretty average at the moment because I did go to cash at one point and then reinvest. So it's kind of reset. Flex, you can see here, that the money was left invested in there, which is why it's showing a 50.5% 0.54% return. That was one of the stocks I did not sell out of. I just left alone. But you're going to see these investment times where we went to cash here, and that's why those returns are pretty mediocre at the moment. So plan on leaving this as is for now. We'll see. We'll keep an eye on the stock market. This was where is it? There was a story that came out which said nowhere to hide. This is about bond managers lagging the benchmark in the rare misfire for the market. So basically what this article is saying, 60% of the funds that were actively managed, this is bond funds, they're actively managed and that were pegged to Bloomberg's flagship bond market index, they've trailed the benchmark. So you can see right here, this is the benchmark of bond returns for like three-quarters of 2021 into 2022. Bloomberg aggregate return was in the negative 15%. And then you can see these actively managed bond funds were a little bit worse. Looks like maybe 18% in the negatives. So again, just another example how actively managed funds tend to have a difficult time. Bonds seem to have fared better than certainly actively managed equity funds. You can see here they've done a little bit better, but you've also had a year in 2015 and 14 where the actives didn't beat the market. Again, this is the reason why I say I think just index trackers are just so much better. You don't have to worry about trying to pick out which funds are going to be able to outperform the indexes. And you see these examples right here, 2014, 2015, where the orange, which is the index, is beating the active managed fund. So just another example why I'm so adamant on index trackers versus trying to choose out of the hundreds and thousands of different actively managed funds, whether you're talking about equities or bonds. Let's see if there's anything else. Just quick look at the crypto, the Bitcoin price today, 16,523. It's been a rough time for cryptocurrencies. We've seen, this FTX debacle here causing this big crash in the market down to 15,840. It's kind of made its way back up again to 17,800 and then back down again. So if you're not in cryptocurrency, you're not in Bitcoin for the long term, and you cannot handle volatility, it shouldn't be for you. Fact of the matter is the fundamentals of Bitcoin have not changed at all. Will it continue to get crushed or thrive and survive long term? I personally think it will. I have reasons to believe that long term these problems are going to wash out. Bitcoin will be fine. Can't say the same about all other cryptocurrencies. I think 99% of them will probably go to zero. But I think Bitcoin, possibly Ethereum, fine again. Just my personal opinion. That was a lot. That was a mouthful. Yeah, how long have we been chatting for today? What's the football score? That's what I want to know. Hold on a second. I have to check the score. Is it still halftime? Still 0-0. I think England should be able to beat the US very easily, but we'll see what happens. Hopefully we'll have a victory. How long have we been going? 53 minutes. That's way too long. Let's see if you have any interesting comments. That was the Euros World Cup semi, the previous. Yes, you're right. I remember watching the World Cup semis 4 years ago. Where was I? I think it was in Orlando. Yeah, and I was watching it. There was a lot of England supporters out there. And I remember that loss. It was just kind of heartbreaking because England was so close to getting to the finals that year. Very disappointing. Dave Dawson is here. Hi, Dave. Evening. Robert Pates, probably watching the game. Peer-to-peer nation. Hello from Finland. Nice to see you. Have trading 212 pulled stocks that are P2Ps due to the change in US withholding tax? I don't know the answer to that question. I can find out. WH is here. Good evening. How do you rate Easy Money as a peer-to-peer provider? They haven't had any defaults and perform well during COVID. I think their LTV is a little bit higher than Loanpad. Yeah, I think Easy Money is definitely one of those companies that is looking, and it looks like an attractive place to put cash. I do like that they're paying a better target rate now. So you can get 4.03% to 8%. Some of the upper percentage amounts, I don't want to create an account. They are high. So if you want to get 5%, I think you got to put in, I don't remember how much it is. Because they don't tell us that on the front page. But I think you got to put in a good chunk of money if you want to get these higher rates. But if you're looking at these, oh, hey, sorry. 20,000, I'm reading this wrong. 20,000 plus to get 5% and 100 grand to get 6. I think this, you know, for 100 grand minimum, it's not worth it. 20 at 5%, yeah, okay, I could see that. And then 4% 100 pounds, yeah, I think that's kind of a no-brainer. I've done research on Easy Money. I don't have any money in them myself, honestly, because I spent a bunch of money on Christmas presents this year. But they seem to, as far as I can tell from the outside, they seem to be doing the right thing for investors. Yes, they have not had any defaults. They've got pretty decent Trustpilot reviews. Not that Trustpilot reviews are necessarily always on the up and up. But I am in contact with a rep from Easy Money to try to get them on the stream. I want to dig deeper into them, find out more about them. I'm not going to say I recommend them because I can't really recommend them personally because I haven't invested in them. I just don't get 100% behind companies I haven't invested in because I haven't, dove deep enough into them to know. But I want to get the person I'm looking to get onto the stream soon, do a Q&A, find out more about them. But they are very similar to Loanpad. I just personally feel more comfortable with Loanpad because I know Louis. I've had a chance to sit down with him many times. I've been to meet Louis and one of their borrowers, one of their main borrowers, Hanf. I've sat down with them in their office, had a chance to talk to them. That's something that's kind of rare to be able to do. Like you can get cash back here if you want. That's going to end in January. So if you want to get Easy Money cash back, you can get up to $250 if you want to put in $20K. So not bad. It's like 1.5%. But yeah, I think they're solid for sure. I think they're solid. More will be revealed about Easy Money. The fact that they're an easy brand, I think gives people a little bit more confidence in the brand. So obviously EasyJet, they got the same looking logo. So yeah, more will be revealed about them. But so far, I'll say so far so good. So far so good. Let's see what Mike has to say about Easy Money. Mike Powell. Easy Money puts a good bump to the nominal return on minimum qualifying investments. My nominal return increases to about 6%, counting the savings as interest. So Easy Money perks. Okay, so I don't know what that means. Is that kind of is that something about them they have a membership, right, that you get. I just saw that on here. I don't know what that is, but you get some kind of... Oh, here you go. Easy Money Plus membership. So it's a card. So you get savings worth hundreds of pounds at thousands of Britain's biggest retailers. Okay. So that could, yes. Cinema discounts. Discounted gift cards. So yeah, if you use that, you could use that as a way to bump up your return. So that's interesting. Apple. Is there any details about how much these savings are? Doesn't really tell you. Yeah, that's a good point, Mike. Well done. Okay, we are about an hour in, so I'm going to go watch the rest of the football game and watch England smash the USA. Have a great weekend, everybody. Thank you so much for joining. If you're interested in becoming a Patreon member, you can scan that with your mobile phone and sign up and support financial thing. But if you don't want to do that, just hit the thumbs up. Subscribe to the channel. Go read the website. I change articles and update them on there constantly. And I will see you hopefully next Thursday. All being well. Have a great weekend. Go England. We'll see you soon.